Hey Puppy Trades, I wanted to do a video analysis update on the short-term outlook of the stock market. We'll talk about Tesla, we'll talk about Microsoft, we'll talk about the Nasdaq, we'll talk about some swing trades, we'll talk about some long-term ideas that I like for myself personally. Okay, the reason we're going to focus on the short term in this video is because has anyone heard recently that someone say, maybe it was a guru, maybe it was you, maybe it was your friend, say the stock market's really choppy right now, price action's really frustrating, they're not getting any follow through on their breakouts. What they're really saying is that they're bored. They're bored. And the reason that they're bored is because price action has been moving sideways. What I'm here to tell you is that the options market is extremely aware that you're bored. Okay, so I took this picture yesterday. This is from iVolatility.com. These are the top and bottom stocks within their implied volatility range. This is completely free. You go to iVolatility.com, advanced ranker sample, top and bottom stocks within their IV index range. So these stocks right here, Upstart, Box, Clover Health, they're at the very high end of their 1 year implied volatility range. So they have moved a lot. And so option sellers are charging a very high premium to buy these options right now because they've been moving a bunch. On the other hand, SPY, the Dow Jones, Cisco, Microsoft, and Oracle, they are in the bottom of their 52-week implied volatility range. So implied volatility and option prices are synonyms. So because SPY is in the bottom of its 1 year implied volatility range, the options are the cheapest that they've been, all else being equal, in the past 52 weeks. So the options market knows you're bored and you're frustrated. That's why I always like to say buy the boredom, because that's when implied volatility is going to be the cheapest. So implied volatility is a very mean reverting indicator. Okay, it will go from periods of low implied volatility to high implied volatility. It will go from periods of very high implied volatility to low implied volatility. So SPY, the Dow Jones, Cisco, Microsoft, and Oracle, they're about to go from moving sideways to moving up and down a lot. So let's talk about the short-term outlook, about where that movement is going to be, which direction that price movement is going to be. So this is the Nasdaq QQQ. This is the low of 297. What appears to be in process right now is that a 1, 2, 3, 4, 5 waves impulse has been completed from this low. Then we have an A, B, C corrective structure. The bottom line, this is very similar to what we'll talk about on Tesla as well, is that even if you zoomed out and you thought that this was a bearish structure, right? Let's say you were a Nasdaq bear and you thought that this was a bearish structure. Either way, no matter how you count QQQ right now, if you say that this is an A, B, C correction, then what the bears are going to do, the Elliott wave bears, they're going to take the length of this wave A and they're going to place it at this wave B low. That's going to give them their wave C minimum target. So the wave C minimum target for QQQ is 336. Okay, that's the bearish scenario. The bulls, they're going to say that's not an A, B, C correction. This is a 1, a 2, a 3, a 4, and a 5. That's completing a wave 1. This is an A, B, C correction to put in a wave 2 low. So the bulls are going to take the length of wave 1, place it at the wave 2 low, and that's going to give them their wave 3 minimum target of 336. The bottom line is that for QQQ, as long as 309 holds as this low, then QQQ at minimum is going to 336 in the very short term. How short term? Well, wave 3 and wave C are generally stronger and faster than wave 1 and wave A. So QQQ goes from March 5th to March 16th. It's about 10 days. So in the next 2 weeks, if QQQ stays above 309, even if you're a bear, you're expecting QQQ to go to 336 because that is the wave C minimum target. The bulls, which is what I am, are expecting that this is the wave 1 and this is the wave 2. So as long as 309 holds for the bulls, they're going to take the length of wave 1 and place it at the wave 2 low. That's going to take them to the minimum target of 336. This is why I use equal legs so much. Because even if you're saying this is a wave A and this is a wave B, the minimum target is wave C, which is at least the length of wave A, which would take QQQ to 336 in the next 2 weeks. Now, the bulls, they're going to say that's not a wave A, that's not a wave B, this is a 1, 2, 3, 4, 5 wave 1. This is an ABC correction, putting in a wave 2 low. So they're going to take the minimum length of wave 1, place it at the wave 2 low, and if 309 holds, QQQ is going to 336. So, how can you tell the difference between a wave 3 and a wave C? Let's ask Tesla. Okay? This is the short-term outlook for Tesla. Let's say that you're a bull, which is what I am. And you're saying this is an A, B, C correction, and Tesla's starting a 1, 2, 3 waves impulse from this low of 539. What you're going to do is you're going to take the length of wave 1, place it at the wave 2 low, and that will take Tesla to 803 in the next 2 weeks, so long as 624 holds as the low. Now, what if you're a bear? You're saying, oh, puppy trades, he's just the perma bull, right? That's not a wave A and a wave B. That's a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Well, congratulations. You still think the same thing that I do. Because if you're saying that this is a 1, 2, 3, 4, 5 waves impulse, then you're at minimum looking for an A, B, C correction that will take Tesla to, guess where? The length of wave A, place of the wave B low. So what the bears are going to do is they're going to look to short in this 803, 828 box. The bulls are going to look to take profits at this 803, 828 box, or they're going to hold longer for sideways consolidation and then take the wave 5 higher. Okay? The whole point is from an Elliott wave perspective, if you disagree and say, oh, that's a 1, 2, 3, 4, or 5, then you're looking at either way to take the length of wave A, place it the wave B low, and go to 803 in the next 2 weeks. The bulls are going to say it's not going to end there. How are we going to know? Well, in general, wave 3 at least will go to the 161.8% extension of wave 1. Wave C generally cannot and should not go past the 161.8% extension of wave 1. But both wave 3 and wave C are at least the same length of wave A/wave 1. The bottom line, long story short, no matter how you count this from an Elliott wave perspective, if this low holds from 319, Tesla's going to 803, regardless of the wave count. And QQQ is going to 336, regardless of the wave count. So this is a really important distinction to understand. Is this a 1, 2, 3, 4, 5? Or is this an A, B, C correction? This is really important to understand So let's look at the S&P 500 sell-off last year. What a lot of people did, we know that the answer was that it was a B, C correction. What a lot of people did was they were like, oh no, that's not an A, B, C correction. It's a 1, 2, 3, 4, 5 waves impulse. And so they were looking to short these rallies, expecting that we were going to go another leg down. But as we know, that wasn't the case. That wasn't a 1, 2, 3, 4, 5 waves impulse. It was an A, B, C correction. Now, I think if we look at Tesla right now, and we look at QQQ, the answer is not 1, 2, 3, 4, 5 from the high. The answer is that this is an A, B, C correction. And this is an A, B, C correction. And Tesla isn't a 1, 2, 3, 4, 5's impulse. It's an A, B, C correction. But the point is, regardless of what side you're on, you're either expecting a 1, 2, 3 waves impulse from the low, or you're expecting an A, B, C correction from the low. The whole point is that we're going to 803 no matter what side you're on. Okay? And we'll really know for Tesla if it's a wave C or a wave A based on if we go past 828. We look at QQQ right now, really hard to count this as a 1, 2, 3, 4, 5, in my opinion. Let's see if we can find a tiebreaker. I think Microsoft is really acting as a tiebreaker right now. This is very clearly a 1, 2, 3, 4, 5 waves impulse to complete a wave 1 for Microsoft. And I tweeted about this, by the way, on March 18th, looking to buy this wave 2 low and ride Microsoft higher. And Microsoft has broken above this wave 1 high. If we look at Microsoft right now, this is definitely a 1, 2, 3, 4, 5 waves impulse. So we're looking for this ABC correction to put in a wave 2 low. This has all the symptoms of an ABC correction on Microsoft, which means that this is definitely an ABC correction for QQQ. And if it's an ABC correction for QQQ and Microsoft, it's an ABC correction for Tesla too. But if we look at Microsoft right now, Microsoft is above this wave 1 high of 240. It broke that today. Also, this wave 2 correction stopped at the 61.8% retracement of this wave 1 impulse. And this is clearly a 1, 2, 3, 4, 5 waves impulse. This is clearly an ABC correction for Microsoft. And today, we broke above this sub wave 1 high of 240. So we have a lot of confirmation right now that Microsoft is within a wave 3 of wave 3. If we take the length of wave 1 for Microsoft, we place it at the wave 2 low, the minimum target for Microsoft is 258. And that should be hit in the next 6 to 8 weeks because this is from 1.6 to 2.16. So this takes less than 6 weeks. That means wave 3 should be reached in 6 weeks to 8 weeks conservatively. But the bottom line is that the equal legs target for Microsoft is going to take it above this wave 1 high. So if Microsoft is breaking out to 258, QQQ is not going to be taking an impulse down. And neither will Tesla. Long story short, no matter how you count this, QQQ is going to 336 so long as 309 holds as the low. Tesla is going to 803 regardless of how you count it, so long as 624 holds as the low. My suspicion is that Tesla is actually going to be a wave 3. It's going to go past 828, and then there's going to actually be another wave 5 higher, and that's going to take Tesla to new all-time highs, and that's going to be a whole nother bullish story in and of itself. But Microsoft is strongly hinting that this is not a 1, 2, 3, 4, 5. This is an ABC correction from this high, and the whole market's about to thrust higher. What we're seeing right now is that the quarter ended on 3/19. The triple witching date of 3/19, the quarter ends. And now the first 2 days of this new quarter, we've seen a lot of rotation out of the retail names, out of the airlines, out of the banks. And we started to see, QQQ, Facebook, some of these more tech names begin to resume leadership in the market, which is exactly what we want to see. Speaking of, this is obviously everything that I said, extremely short term. Extremely short term. I don't want anyone watching this to think that, if any of these levels are broken, it's full bear, we're going to have a super crash. Okay? Remember, long-term chart of Chevron, multi-year chart of Chevron, clear as day. This is a 1, 2, 3, 4, 5, large degree wave 1, an A, B, C correction, large degree wave 2, Chevron entering a super bull market on the longest term time frame. American Airlines, wave 1, wave 2, wave 1, ABC, wave 2, American Airlines entering a super bull market on the longer term time frames. So we know any time frame longer than 4 months, any time frame longer than 6 months, this market is full bull. The short term time frame, we know that QQQ is to be considered incomplete until it reaches 336. Tesla is incomplete until it reaches 803. I suspect it will pass 828, and we'll know it's in a wave 3, getting ready to take a wave 4 and wave 5 higher to new all-time highs. Let's talk about some more swing trade, little longer-term setups. Remember, XLV very clearly has a wave 1, an ABC correction wave 2. Wave 3 goes to exactly the 161.8% extension of wave 1. We have another ABC correction to put in a wave 4 low. Now XLV, the minimum target for wave 5, so long as 109 holds as the low, is 124. Minimum, that's going to be hit in the next 2.5 months. Okay? I think XLV, probably my favorite gauge of the market right now, because this is very clearly a 1 ABC correction wave 2. Wave 3 stops perfectly at exactly the 161.8% extension of wave 1. ABC correction, textbook, retest the highs of wave 1. And now wave 5 is at minimum the length of wave 1, places the wave 4 low. XLY, some stocks in this sector like Home Depot, which hit a new all-time high recently, I believe. McDonald's, Tesla, and Amazon are in this sector. I really think an emerging theme we're going to see is this quarter recently ended on 3/19, and now we're going to get out of the banks, we're going to get out of the tanks, we're going to get out of oil, and the usual suspects, the growth stocks, the tech stocks, they're going to resume leadership. So this is XLY. Very clearly to me, a 1, 2, 3. This has to be a wave 3 because it goes well past the 161.8% extension of wave 1. So this has to be a wave 3. This is an ABC correction, putting in a wave 4 low. Now XLY is heading to, at minimum, the 161.8% extension of this wave 1 impulse off this low. So XLY going to 183 in the next 2.5 months. So XLV going to 124, XLY going to 183, QQQ at minimum going to 336. Okay, don't get bored. This is not the time to get bored. And the options market is very aware that you're bored right now. Let's look at some, more swing trade setups. I thought this was really funny. Again, another short selling report on an EV stock that I was talking about. This is FUV, Acromodo. Today, apparently, it went down because of another short report. So, isn't that really interesting? Do you really think a large institution is, shorting Acromodo about 60-70% off this high? I don't know. What's a short seller? A short seller is a guaranteed buyer. Okay? Richard Wyckoff was very aware of kind of how these institutions operate. What we need to understand as retail traders is that if we really believe that a stock is going to explode and be a 400, 500% bagger, it's going to be a 1,000%, return on investment in the next few years. If we truly believe that about a stock we're holding, as I believe about, Acromodo and, Nokia, all these EV stocks, if we truly believe that's going to be the case, then what we're also simultaneously believing is that the institutions are going to do everything they can to shake us out of this. So this is Richard Wyckoff. Okay, we don't really need to focus on, the chart necessarily, because the wave theory will cover, all of this. What I really like here is he talks about the selling climax. What Richard Wyckoff has basically, taught to many people is that institutions and hedge funds are very highly concentrated in these money managers. In total, about 92% of all hedge funds, all the money that hedge funds invest, about 92% of those funds are controlled by about 570, operators, as they're called, the institutional traders. I think this is really interesting. This is a note. We talk about selling climaxes a lot. This springboard selling climax. I really think this is interesting. Late within a trading range, the stock's dominant players will make a definitive test of available supply before the markup campaign unfolds. A spring takes price below the low of the trading range and reverses the close within the trading range. This action allows large interest to mislead the public, right? It's not a conspiracy theory. This Richard Wyckoff is telling you the institutions are going to mislead the public about the future trend direction to acquire additional shares at bargain prices. Look at that. This action will allow the large interest to mislead the public about the future trend direction to acquire additional shares. A terminal shakeout at the end of the accumulation range is like a spring on steroids. Shakeouts may also occur once a price advance has started with rapid downward movement intended, look at these words, intended to induce retail traders and investors in long positions to sell their shares to large operators. Look at this. This isn't, some, guy wearing a tinfoil hat. This is Richard Wyckoff telling you, if you believe that you're in a monster, if you believe you're holding a monster, you are simultaneously believing two things. One, the institutions will do everything in their power to get your shares from you. And two, that they will flat out mislead you, mislead the public about the future trend direction to acquire additional shares. So if we look at some of these EV stocks, do we really think that, some of these extremely skilled hedge fund operators are shorting Acromodo 60% off the high? What is a short seller? A short seller is a guaranteed buyer. So isn't it really interesting that all these short reports on all these EV stocks are occurring at the best times to buy them for the long-term hold? I just think that's very interesting. You need to be playing 4D chess. Don't play checkers. You're playing chess. Okay? This is Acromodo. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5, large degree Wave 1. A, B, C correction, large degree Wave 2. So right now, the setup for swing traders and long-term investors, obviously not investment advice, I like Acromodo personally. If 12.50 holds as the low, I think there's a lot of upside for Acromodo. If 12.50 is broken, I'll update Acromodo. But this is a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 to put in a large degree wave 1. I thought it was really interesting. Right after I pointed out, that Acromodo is getting to a buy zone, another short report was released on another one of my EV stocks. But I'm in Lordstown Motors, I'm in XPEV, I'm in Lee Auto for the long-term hold. Okay? The institutions, they're not getting my shares. Okay? They're not going to fool me. Okay? And as a long-term, I enter those as long-term investors. Okay? If you start a stock as a trade and it becomes a long-term investment, that's not a good thing. But if you start a stock as a long-term investment and it becomes a trade, that's probably a bad thing. Okay? So I'm in these EV stocks for the long haul. I've been in these EV stocks for the long haul. I'm just trying to warn you guys. I think the institutions are trying to get your shares. That's all I'm saying. I'll leave it at that. This is wave 1. This is wave 2. This is wave 3. This is wave 4. This is wave 5. Largely wave 1. Look at this beautiful pitchfork. We take this low, connect it with this high, place it at this low. Reactions on the reactions on the lower bound. Lower bound acts as a magnet. Then boom, median acts as the magnet. So this is a very solid pitchfork here. I'm expecting, regardless of the wave count, I'm expecting the median of this pitchfork will be reached in the future. We can see that's very high up right now. From a wave count perspective, I'm looking for a 1, 2, 3, 4, 5, large degree wave 1, A, B, C correction, large degree wave 2. This is a 7-month move. So I like Acromodo as a long-term hold for myself personally as well. I think it's also a swing trade setup right now. In my unprofessional, unlicensed opinion, if 12.50 holds as the low, that's going to be the stop loss. If it's broken, I'll be looking for another bottom, honestly. If this is broken, I'll update Acromodo. But tentatively, if 12.50 holds as the low, I'm looking at the very minimum that Acromodo will go the length of wave 1, place it this wave 2 low. That's going to take FOOV to 47 in the next 6 to 7 months. So I think conservatively by the end of the year, Acromodo is going to 47. Okay? I'm just trying to say, they want your EV shares very badly. Okay? They really want your EV shares. I'm not giving mine up. You can do what you want with yours, if you even have them. Here's another monster. This is Nokia. Okay, I love Nokia. I love Nokia a lot. But let's talk about Nokia for a second. I believe Nokia is going to go from below $4 to, at the very minimum, 60. Very minimum 60. Next stop is going to be the 20-25 range. But just, take what I just said. I'm talking about Nokia going up 500%. So if I truly, at the minimum, I'm talking about Nokia going up 500%. By the time it gets to 60, that's a 1,500% return on Nokia shares that I'm going to enter without options expiration risk. So just take that statement for a second. 500% medium term return on shares. 1,500% return at the very minimum on shares is what I'm projecting. So if I think that Nokia is a monster, what I am simultaneously acknowledging is that the big money is not going to make this an easy hold. They're going to do everything they can to get me out of my shares of Nokia. Okay? With diversification, position sizing, and the fact that these are shares, they don't ever expire, I'm willing to take that risk. And I'm not going to give up my Nokia shares because I know what I'm holding. The reason I know what I'm holding is from an Elliott wave perspective. Okay? Wave 1, A, B, C correction puts in a textbook wave 2 low. So this is really invalidated all the way down here at 1.63. Obviously, that's too wide of a stop loss. If we take this wave 1 and we put it at this wave 2 low, it looks like Nokia is breaking out of a massive nest. So I don't believe that 2.34 will be broken as the low. I really don't believe 2.34 will be broken as the low. Obviously we're talking about a pretty wide stop with either of those numbers. But remember, I don't have time expiration here. Okay, I'm not, selling my house to buy Nokia shares. I'm going to hold Nokia for a really long time. I'm going to hold the electric vehicles for a very long time. I'm not going to give up my shares, okay, because I don't have a time expiration. Okay, I'm not going to get shaken out of this. This is a wave 1. This is an A, B, C correction to put in a wave 2 low. Then we have another wave 1 and another wave 2. This is a 20-year consolidation pattern. This is a 20-year consolidation pattern with what I believe is a high volume breakout. Nokia, in the next couple of years, this is going to be a monster. This wave 1 is about 4 or 5 years. I think 3 to 5 years from now, Nokia is going to be on its way to 60 from 4. And it's not stopping at 60. Okay? But if I believe that, what I'm simultaneously acknowledging is that the institutions are going to try very hard to get my shares. And I'm not going to let them because I don't have a time expiration. Wave 1, A, B, C correction. Wave 2 low. Wave 1, wave 2, Nokia exploding out of a massive nest. If 2.34 holds as the low, in the next 5 years, that's a long time. In the next 3 to 5 years, I'm going to be very happy about Nokia shares. I think Nokia is going to 60, 62. It's going to go to the lower bound of the pitchfork. It's going to go to the median of the pitchfork. And it's going to break above this wave 1 high. So I'll be honest, 62 is a minimum target. If you think that sounds crazy, you probably didn't buy any, Snapchat or Twitter in 2018. You probably didn't buy any Square Cash or PayPal in 2016. You probably didn't buy any of the software stocks in 2019. And you're probably not buying the airlines and the electric vehicles and the silver miners and the Bitcoin miners in 2021. Okay? I love Nokia as a long-term monster. I'm not going to give it up. Let's talk another monster I really like. This is Huya. I like Huya a lot here. This is probably one where I will need to honor this stop loss right here for sure, even with shares. Wave 1, A, B, C, puts in a wave 2 correction. And I believe Huya is going on another wave 1 and another wave 2 low. I really like this Huya setup. I'm going to need to see this low right here of 18.14 not be broken. I don't think it will because we've broken above this wave 1 high. So Huya breaking out of a massive nest here. And this is one I really like because it's going to break above this wave 1 high. And then Huya is going to be on its way to the 60s, to the 70s, to the 80s. I think in the next 12 to 18 months, I'll definitely see Huya go from 22 to around 70, 75, 80. By that point, I'll be able to take off half of my position, still exit the trade with a profit on shares with no expiration, and then I'll just keep owning Huya for a very long time to catch the wave 5 higher. But this is the wave 1, an A, B, C correction to put in a wave 2 low. And now we have a wave 1, a wave 2, a wave 1 breaks above this wave 1 high. We put in another wave 2 low. So let's zoom in on Huya a little bit because this might also be a swing trade opportunity, probably a more defined risk-reward ratio now. If we take the length of this wave 1 and we place it at this wave 2 low, then so long as Huya is above 18, this is a really good one for the short term and the long term. This is from 12.28 to 12.16. In the next 2 or 3 months, if Huya is above 18.14, it looks like this is the wave 1. This is an ABC correction to put in a wave 2 low. 18.14 holds as a low. I love Huya as a shareholder. I love Huya as a swing trader. So I've given some of my favorite long-term ideas. You guys know I like Pfizer a lot, really long-term too. A lot of my long-term picks have done very well. We talked about the airlines as long-term holds. We talked about First Majestic Silver as a long-term hold. You know, the real money's made as a shareholder. But the trick is you can't give your shares up. And if you believe you're in a monster, what you're simultaneously believing is that large interest will mislead the public about the future trend direction. So I think it's pretty interesting that the large interests are publishing all these short reports about these electric vehicles. But I'm holding Nokia. I'm going to hold Huya. I'm going to hold all these EV stocks for a very long time.